Moving the needle on founder failure, one conversation at a time. I'm your host, Lucas Poles, and welcome to Startup 2.0 by Spark XYZ. Join us each week as we give you access to some of the top investors and entrepreneurs around the country to help you think through and overcome some of the top challenges that startups face.
I think there's no better place in the country to be investing than Los Angeles.
What is the problem that you're solving and for who? Like, what is that specific pain point?
Sometimes when a company is not listening to its customers and just thinks it knows better than its customers, has a really, really hard time finding product market fit.
I want to see somebody that isn't going to stop. You know, this person, you just feel like they're gonna make it work.
Big heartfelt thank you to Brex, who without their support, this show would not be possible. We've seen firsthand the difficulties accessing basic corporate credit without providing a security deposit or personal guarantee early on. As companies grow, managing expenses has become more difficult and time consuming, which is why we've partnered with Brex to offer a corporate credit card that is not personally guaranteed, offers higher credit limits, provides auto reconciliation, and integrates with ERPs using receipt capture. Brex is the credit card of the startup ecosystem, and we highly encourage you to check them out.
Awesome. Well, guys, appreciate you jumping on the call. Excited for a very fun discussion today. We will dive into your backgrounds in a bit, but first I want to thank Moonshot House for allowing us the opportunity to come together and have this discussion. Moonshot House is an invitational-only global virtual network for investors, industry leaders, and creative minds. Their mission is accelerating trust between leaders and opening up a world of opportunities for their community, building a platform, enabling their members to virtually stay connected. And so during this time right now, definitely something that can be challenging is staying connected. And so this is a great way to be able to come together and have those conversations. Awesome. So where we're going to begin, we're going to have a very interesting panel today. But where I'd love to start is I'd love for Steve and David to jump in and give their backgrounds. Steve, you're first on my screen, so why don't you give us a quick 2 to 5 minute overview of you?
Thanks, Lucas. So I'm right now head of data science and AI at Australian Computer Society, which is the peak industry body representing IT and ICT professionals in Australia. I have two hats. One is the internal facing, like head of data science, which is the boring, geeky stuff, looking after the analytics team and the data governance. But there is another one that it makes me more excited is about AI community development in Australia. And I'm kind of an evangelist for ACS. So I get to go around Australia pre-COVID and talking to people directly, running workshops and helping professionals to understand more about AI, get interested into learning about it, or connecting all the pieces in ecosystem to work together, academics, startups, and all of them. Apart from that, I do have some side hustles, write for Forbes, and run global hackathons. And I have my new course launched. It is a personal branding course. I know it might look a little bit different from my background, which is in data science and stuff, but I use my, data skills to understand how you can be more efficient and more successful on social media and online. So that's pretty much what I do. And thank you for having me.
No, of course. Thanks for being here. David, why don't you jump in and give us a little bit about yourself?
Sure. So the first decade out of school, I spent on Wall Street. I was a Wall Street tech guy. I ran the trading technology for Drexel Trading in the early 80s, and then did it for Mills and Allen, which was the largest interdealer broker. And then I worked for the four presidents of the four commodities exchanges in New York, handling their technology. And then after that, I started two companies. A web hosting business may have been the first. It certainly was one of the earliest. Grew that business and sold it. And then I created a financial industry extranet, which tied together, a few thousand trading floors, virtually all the major financial institutions in the world that traded. Got connected to this shared infrastructure, and I took that business public and sold it. And then after that, I became an investor, a private equity partner. We formed a company called One Equity Partners inside Bank One with Jamie Dimon. And then Bank One was merged with JP Morgan. Jamie became the CEO, and we became the private equity practice of JP Morgan. And I was their tech investor. And we tended to do large deals. And so I established with my good friend and partner our own VC firm that we did smaller, earlier stage tech investments that a bank wouldn't be interested in doing. They needed to get hundreds of millions of dollars to work in investments. So over the last, call it 20 years, that's what I've been doing. I've been doing tech investing, and and that's what I continue to do. So it's been interesting how business is now done compared to literally 9 months ago. So we've all had to morph, which is really interesting. So
What stage do you play in for investing?
Well, in my the firm that called Extranet Venture Partners, we're do very early stage in tech investing. So it can be from concept to early revenue, and then in the private equity side, those investments tend to be more mature companies, typically doing $100+ million in revenue, sometimes $1 billion. So they're much larger transactions, typically not brands. They're not consumer brands. We don't tend to invest in those types of things, or B2B, and often they're mid-sized companies that don't have a brand that you would readily recognize unless you were in the industry that it served. Then you would know the brands.
Yeah, no, that makes sense. Super interesting. How has it been doing deals entirely kind of virtually recently?
Some of it is I like some of it in the sense that the convenience that people accept doing these types of calls, these collaboration calls, that puts less stress on travel. But when you get to really sensitive things, and by the way, no deal gets done without having to deal with some real friction and tough topics. Some of them are social issues. You're talking about people's compensation. You're talking about people's roles and responsibilities. I mean, these are serious things. And I have to tell you, it's just, it's not the same. You really got to, I'm a firm believer, you got to get out, break bread. You got to spend time with people. They got to get to know you and trust you. And the larger deals, not the VC deals, but the larger deals, the gestation period is, fairly long, and it's very hard to build those types of relationships. And I'm right in the middle of a deal right now that's been just full on for 6 weeks. And boy, oh boy, I just wish that I could, sit down with a couple of people involved, because there's just a blizzard of people involved, because it's a carve out, and there's a big company involved, and there's two, it's a merger of one part of the carve out. It's complicated, and you just you feel like you're leaving something on the table when you're using these tools. Having said that, part of the due diligence goes faster, because you tend to just mobilize and not have to worry about people flying around and being in central locations and so forth. So it's good and bad.
Yeah, no, super interesting. I've always been curious about the I have friends that like very early stage, like not that hard to be able to write a check. But I had a friend that does like Series B deals, and he was like, it's been a little more arduous than typical. So even from the PE perspective, I mean, it's a whole different ball game. So very very interesting.
Well,
Appreciate that.
we're in the middle of another. It's a Series F deal on a company that's just a runaway train success, and that was done all virtually and very fast. But I think a lot of that just has to do with if you've got a business that's a runaway train, you know, you can you could do a deal on Telex, you know, people would just about accept anything. But it's a tough deal. You got to break some bread, you know.
Oh, God.
So it all depends.
Oh, awesome.
Yeah.
Well, appreciate that insight and appreciate both of your background. So I think we're some of the discussion today is going to be around corporate, around their innovation programs, how it's kind of shifted, especially now that everything's kind of been upended in the last 9 months. So I guess the first kind of question is how has the adoption of technology kind of changed? Have they been putting significantly more budget towards it, where maybe they're investing or creating new programs around it, or what have you two really seen kind of in the corporate innovation space? And Steve, why don't you kick us off?
Yeah, yeah, as you know, all these memes going on social media about pandemic driving the digital transformation. I totally believe that they with all these negative effects that we have seen, we all have been exposed to, and it affected people physically and mentally. We do see some benefits coming out of it, and that's a very interesting to see how people are um, using more digital assets and tools to communicate, to work remotely. It is generating a lot of data, a lot of footprints, digital footprints are coming out of this pandemic era, which is a good news for a data scientist like me to see how we can get hold of more data. And on the other hand, we also can see that people are interacting with a lot of online tools like recommender systems are super happy digesting all these interactions, understanding more about the users. Let's say Netflix recommender system, YouTube algorithms are kind of like hallelujah. That's the best thing for us. But at the end, other side, you can see that there is a huge shift in the way people are consuming these materials. We had a problem here down in Australia, and it seems for some reason shoppers thought the toilet papers are going to be the most important thing during the pandemic, and it kind of for some reason it just became not available anymore. Everybody just bought them, and that's not something you could you could predict, right? So um, at the same time that you're generating a lot of these data, at the same time you're skewing a lot of these predictions. And good luck to data scientists to put it back in the right place after pandemic, because you just don't know how much of these will stay, how much will go back to norms, and just making a right balance between these special case after pandemic will be a very very interesting challenge for a lot of I guess technical people, and yeah, more and more we hopefully will see adoption of these interesting high tech to help people making decisions. But that's a good, I guess, that that's a kind of a good challenge to see in after pandemic.
Yeah, I mean, we must have destroyed some of your algorithms. So, playing devil's advocate, I could understand a little bit of the toilet paper because maybe supply chain got destroyed and maybe you could run out of toilet paper, but I didn't understand the water. I watched more people buy like 24 packs of water. I'm like, the water's not going to be turned off. Like, I don't understand why we're all loading up on water as well. And so, yeah, there's it's an interesting use case to be able to throw into there. But David, so you work in a lot of the high end with the large companies, especially in that space. So, uh, how has kind of the mentality around the corporates actually shifted? I've seen a lot of people adopting certain new technologies, whether it's Zoom, whether it's like Microsoft Teams, to be able, or Slack, to be able to integrate into their workforce. But have any new maybe programs started because of it to help drive innovation? Because we've been stuck at home for so long, to maybe either keep employee engagement going or any of the other factors that have come up because of COVID.
Yeah, it's just been massive shifts. I mean, you could talk for hours about what the pandemic has caused, and there's been a lot of winners and a lot of losers, and I think that and it's impossible. It was impossible to predict this until it actually happened. And there's these subtle things that you got to pick up on. Look, it's obvious. Everybody's using Teams. They're using Zoom. They're using Google. The other day, we had to do an operating plan. We had 6 people, on Google, just typing over each other. Click, click, click. It was actually hysterical. Like, I never saw work getting done like that, where you got 5, 6 people typing over each other, working on different paragraphs in the Zoom document, in the Google document. So collaboration has just taken off. It's on fire. Everybody's accepted these tools. That's the obvious. Look at Zoom. It's $110 billion enterprise value.
Yeah.
Go figure. I think that's completely, personally, completely crazy, because all these tools, much like a phone call or a conference call, are going to be free in a few years. So, it's just my 2 cents. And if anyone's going to win, it's going to be Microsoft and Google, because they have you, wrapped around a lot of other ways. But there's just a ton of things that are happening. Like, a couple of things that are interesting is that the New York restaurant market has been decimated, as an example, because everybody's left, right? People aren't going into the city. That's just very simple. And they've really tightened down on the lockdown on restaurants. Well, if you go right outside the city, in the surrounding areas, they're having the biggest boom they've ever had. So New York City's loss has been the suburbs' gain. And it's the same thing in real estate. The prices of real estate have gone up substantially in the suburbs and down in the cities. And so you look at the shift in business. So, for example, Uber Eats and Grubhub and all these people that deliver food, that business has just exploded. And then you look at the restaurants, and they kind of fall into 2 categories. Fine dining has got destroyed because they don't do delivery. And no one wants to sit in a restaurant for 2 to 3 hours. So if you deliver food quickly and it's, Grubhub available, those businesses have done really well. And in the technology, just in general, what I'm finding with the large financial institutions I'm dealing with, pretty much everybody is home except for critical people that, for example, low latency trading, where, not even milliseconds, but nanoseconds of time make a difference, and you can't get that performance from home.
Yeah.
Other than that, basically everybody's working from home. And the biggest issue that these firms have now is they had to get everybody up and operational. So they just said, okay, here's how you get up. Now they're like, holy crap, there's this thing called the internet between me and the content they're consuming, and there's all kinds of security risks. And unclear that, like, how many people in the financial markets are not in compliance with things like SOC 1 and SOC 2? They're just, it's everybody's
Oh.
flying by the seat of their ass, and everybody's just biting their fingernail, waiting for a meltdown to happen. So now what's happening is these financial firms are all just going security tech. How do we protect these endpoints?
Yeah.
And I think you're going to see, you know, beyond the Zooms and all that, you're going to see just a massive build and spend on endpoint security, because everything is moved to the cloud, and the content, you know, sitting between the user and the content is the internet, and that's not trusted. So, and these financial firms operate in a zero trust world, or at least a good percentage of their people do. So that is just a massive shift. So like from an investment standpoint, I look and I'm saying cloud, you know, are you a cloud business? That's going to be attractive business. Are you a security tech company that can protect companies, you know, remote users? And those are going to be unbelievable segments for a long time. So there's a lot of winners and losers, but you got to kind of peel the onion back, because each of these businesses, they're not all the same. Like restaurants, there's restaurants that are booming and ones that have been demolished. And so it's the same way when you look inside these enterprises. You know, they look like peers, but when you peel the onion back, you realize some have been really impacted because their businesses are actually quite different.
Yeah.
So in your due diligence process, you got to really look at the impact that these businesses have had, and whether you believe they're going to come back, because there is no steady state. You know, in large scale, now forget early stage investing, but in later stage investing, you know, it's historical trends that you look at, past behaviors, predictability for future. The problem is the past may not paint the picture anymore.
Yeah.
So now what's happened is this grunt and grown technology investing called private equity investing, it now has more of a, let's call it a venture feel to it, because you have to look and see what this company is going to be, because you can't rely on what it's been.
Yeah, no, that's very true. I feel like early stage venture, we live in the wild west, and there are no rules, and so it's interesting to hear PE kind of feeling like they're in a kind of similar boat, because you're right, it's a totally different ballgame, because you don't know what how the consumer is going to respond, or what's going to stay and what's going to go as we kind of move forward. So yeah, very interesting. Another point that I really thought was interesting was around your Zoom comment. I feel like there are especially in our industry, like valuations for startups, I don't think has changed very drastically the way that I thought it was going to from March until now. But the amount of money that's pouring into these IPOs, I mean, Airbnb just, I think they're worth more than Marriott hotels at this point.
No, I think they're worth more than the 3 largest hotel chains, if I'm not mistaken. So but don't hold me to that. You know, but I mean, that's like Tesla, right? It's worth more than the biggest automobile manufacturers, right?
Yeah,
So
yeah. It's oh God. Do you think, are you having the same feelings as like the late 90s? I mean, you've had a very long career in this space. Is it similar? Is it different? Do you have?
No, I'll never forget the first bubble. You know, and it reminded me. I used to go get my shoes shined working at Drexel. I'd slip out every once in a while for 10 minutes, because that's the max amount of time you could be out of the office.
Yeah.
And getting my shoes shined. And I remember the guy shining my shoes, and he was, you know, he'd always ask. He thought I was a stock guy, and I wasn't. We were trading commodities and futures and things like that. And he thought everybody was a stock guy. And he said, "Got any tips for me? Got any tips for me?" He was just making you know, small talk.
Yeah.
And so one day I said, "Not really." And I said, "What do you invest in?" He started telling me how in interest rates back then, credit card interest rates like 18 to 20%, because normal interest rates were like, you know, 10.
Yeah.
And so he was telling me how he's borrowing money off his credit cards to invest in the market. And this was a shoe shine guy. And I said, "You know what? We're in trouble."
Yeah.
And sure enough, the thing blew up. Now, the parallel to that is that we have everybody home day trading. You know, they're all on these, you know, they're all on these new, these
Robin
newfangled.
Hood and yeah.
And so volume is up and everybody's speculating and gambling. You cannot justify, in my personal opinion, you cannot justify these multiples. Like you look at Zoom and you say, okay, it's doing $1 billion, $1.5 billion of revenue, and I don't know, 500 million in earnings or whatever it is. And you're saying, okay, well, it's got 100 billion. So, I mean, how do you get there? How do you get from 500 million in earnings to like 20 billion in earnings to justify it does? But the challenge you have is it's when you get into just riverboat gambling like this, nobody believes Zoom or these companies are worth that much, but they believe they're going to go up before they go down. So the problem with shorting against it is you can get really skinned alive, even though you ultimately could be right. Can you stand the pain? So it's a really scary market. Like I wake up every day, I've been telling my son, I go on to my E-Trade and I just want to like short everything. Then I say like, I know I'm right, but I know there's a lot of lunatics in this market right now. And I don't want to bet against their stupidity, so I end up not doing anything.
It is scary to bet against crazy. Like it really. Oh God, that was amazing.
But it's really hard when you're a private equity guy and you're taught, years of not overpaying and pay reasonable industrial multiples for companies like, 6, 7, 8 times EBITDA, and then you look around and everything, even stuff that's not interesting, is trading at 15, and you say to yourself, how do you put money to work in an environment like that? So, we'll see. This to me feels like a bubble, but it's hard to know.
Yeah, no, I agree. Awesome. So you touched on it a little bit, and maybe I'll grab Steve's opinion. What other types of technologies do you think that people are going to start increasing adoption? So, I mean, we mentioned Zoom, but then we went through cybersecurity and we went through a couple other things. So, Steve, what else do you think maybe is going to be out there, especially from the data science perspective?
Apart from these that we mentioned already, I think augmented reality and virtual reality is going to be huge in 2021. That's just based on the trends that I see around the innovations happening, and there are lots of I guess lots of components hand in hand helping that happening. So the 5G, AI, the technologies that's like hand in hand, making the change in virtual reality. So let's say if you're using these very expensive goggles right now, it's very difficult for you to move around, even going out of your home or your workplace. But if they can just which is happening right now, if they can make the size a lot smaller, and then you can have the connectivity with 5G, and you can have computer vision understanding your surroundings, then the augmented reality can be the actual reality. You can have it as you go out, and you can have these metadata coming from everywhere, understanding where you're going, or if you have some sort of sales going around, or some discount from the local pub. These are going to be all the metadata that people would digest, and will be bombarded with these information. And that's I can see that it will start from the next year, seeing the early versions coming out. Also, one of the trends that it was very obvious, people were showing appetite to, I guess, interact more with chatbots and robots and machine learning algorithms, which was not something people normally would trust. Like my mom still doesn't trust Alexa to give her some kind of advice, but then you can see that there's a shift that people are asking for advice, like psychology therapy and help from a robo advisor is kind of a new trend, and I guess that's a kind of scary and good thing at the same time, because then the next generation is going to be actually the ones that will be exposed more towards scams, uh, and all these ethical things behind using robotics and I guess these chatbots to make some sort of false claim or doing some fraud activities. Because of the trust, people will get into these traps a lot easier, and that's a whole new issue that the next generation is going to deal with it. And yeah, I guess that's the major thing for me is um, how these virtual reality and augmented reality will help us to feel more comfortable working from home, uh, getting connected to people. As we all just mentioned, that Zoom calls are great. They're helping us to get connected to those that we can't have face to face kind of um, chats right now. But the reality is, it is still doesn't feel very, I guess, close and very, um, I guess, human like.
Yeah.
It's not something that we feel we're connecting to our team as usual. I was telling you that Australia is kind of post-pandemic right now. We're back into the office. I'm actually into the office, and my team is another room, and we just talk to each other on a daily basis. Everything is pretty much back to the norm, and we can see the difference right now from 2 months ago, where we couldn't have these kind of conversations. Everything will go to the lengthier talk, the especially if there's a complex meeting around ideation, innovation. That's something that you would like to have arguments and discussions in a more real fashioned way. And the other complexity is jokes. It's like if you want to tell a joke on Zoom calls, just good luck with it. Like either people need to just unmute and say hey hey hey, or you will have just no reaction, and you're just talking to screen. We-
Yeah, I
these are
gotta
the
have
reality of the change in our I guess the way we're interacting. And I don't know how much virtual reality is going to help with that, but I hope that with the appetite of people trusting that kind of technologies, is like feeling it's more real, would help us to kind of get closer to each other. There was this sample, a guy. I'm not going to give a lot more information, but a guy actually married a augmented reality kind of tool, which is a very interesting thing. I've never heard of that, but it seems that some people are kind of going to the extreme and feeling that these augmented reality can replace a human interaction, and then the marriage is like just a little bit too extreme. But still, that might be the scary reality of the near future.
Yeah, no, definitely. Very interesting. So I guess we touched on it a little bit, right? So you're kind of back. You're quote unquote post pandemic. Fortunately, in Australia, we're all quite jealous of you here in the U.S. locked at home. But where do you imagine? And I guess this goes especially both, especially David. Where do you imagine the future of work going? So, what habits, I guess, have you seen changed now that you're kind of 2 months into normal working? What habits have changed, and what have kind of stayed the same? And then where do you see this evolution going?
Well, one thing I just picked up on, which I is stunning, and it'll be interesting to see if it's just a negotiating tactic or it's reality. But Goldman has announced its intention to leave New York City. So there's the top, financial firm in the world. Now they all did this like, 15 years ago, JP Morgan, Goldman, and they threatened to leave, and they ultimately, put a lot of back office people over in Weehawken and Hoboken and so forth. So it was sort of a threat, but they never moved the heart of their business.
Yeah.
And if somebody like Goldman actually pulls out and makes it work somewhere else at lower cost and less headache,
Yeah.
this could have devastating effects on places like New York City and other major cities. So it's really going to be interesting to see. We had this migration towards the city, and and then out of the cities to the suburbs. But like, where are the people going to ultimately land? Let's call it 3 to 5 years from now. It's very unclear, and it's a bit of like follow the leader. If somebody like Goldman does it and it works, and they're able to lower their costs, well, that's going to force everybody else out. And once these big financial institutions pull out, the ecosystem that they service drives so much revenue.
Yeah.
It's not like an Amazon who decides, we're going to put up, a factory and have a bunch of people who work at minimum wage. I mean, you're talking about very expensive people who spend a lot of money. So I'm just curious to see whether that's just a negotiating tactic to get some incentives from the city, or whether this is going to be a reality and then form a trend.
Yeah.
That would just be so disruptive to the marketplace. But I don't see, I see probably about 25% of the workers that I know will never go back to the city. I think 25% have stayed and worked right through the pandemic, even when they weren't essential workers. That was a very loose term. And then I think about half the population is going to be in some hybrid mode. Like myself, who I just, it was like time to get up and make the donuts. I got on the train. I went to work. I asked no questions whether I had to go there or not. I just felt like that was it. My guess tells me when this goes back to normal, it'll be, a couple days in, a couple days out. So I think, but only time will tell. I do not think we're going back to the way it was. That I don't see.
Yeah. And so, I mean, even on the idea of the evolution of kind of working, I mean, oh, I lost David. Just kidding. Steve, why don't you give us your thoughts?
Yeah, no, totally agree with David.
No, sorry about that. I had a dog that was about to start barking. So
it's fine. This is work from home. So this is
yeah, exactly. So now you see the downside to working at home, right? I got a dog, and he's my door alarm and everything else. I saw him getting about ready to start barking, so I tried to muzzle him.
Well, see, I also find that interesting because it's so there are the downsides from the working from home, but then like my thought is like, is it also like a generational thing? Like, are the parents that have kids like going to want to work? Like, to me, those are the ones that are like, get my kids out of the house. I want to go back to work. Like, I'm losing it here trying to balance kids and work at the exact same time. So I don't know. I find it interesting as we kind of move towards that, and maybe the younger generation will feel more at home doing more of the hybrid mode, where maybe a different generation might want to go back fully, or what the actual implications there are.
Well, one quick question. Somebody mentioned this, all my kids are out of college now, so I'm not living through having kids homeschooled and worried about walking in front of the camera with my skivvies or something like that, which has been a lot of those happenings. But the one thing I was just curious about, like the whole idea of testing just went out the window. I mean, how do you test somebody? Kids got 8. I mean, you got to be kidding me. Like if I was a COVID kid, I'd be like Albert Einstein,
Yeah.
I mean, I would be acing everything, you know, and
Oh my
I would
God.
never study. Like, I don't get it how that all works.
Yeah. Open notes on everything.
Like, right? I mean, it's a joke, right?
Yeah. I mean, I guess. I mean, for all honesty, like it's open notes now as an adult. Like I'm not 100% sure why we don't do it as kids now. Anyways, like if I need to learn something or I need to find something new, I will Google it and I will figure out what I need to do.
Yeah.
I don't know. It's a total
Yeah.
shift.
So I don't know what kids are actually, I don't know what they're learning staring at a screen. And then, I mean, I, I think we got, you know, I'm hoping we got to get kids back in school. I think it's more than that. I saw the saddest story last night I was watching, and this poor kid, he's, you know, teenager, a football player, and you know, he just got depressed. Not they canceled the football season on him, and then, you know, being isolated at home, and you know, and then, you know, next thing you know, it's a suicide. And like, you know, you know, and look, virtual reality. I mean, there's been a lot of talk, and that'll become a reality. Virtual reality will become a reality. But we're humans, and we haven't evolved to a point where we don't need interaction. We need love. We need intimacy. We need a social. We need all these things, and we've evolved to that over thousands of years. And this is like been a, you know, a bad fork in the road in many ways. I feel. I don't think this has been good for our psyche and for our overall emotional health. And so I'm really hoping that we can get back to maybe a new normal that's better than the last one, because I do think these tools can be super helpful. But I don't think where we are, I think that the scale is wrong. It needs to tip back a little bit. I mean, we talked before we got on this call. It's not unusual for, you know, me to have 6 or 8 hours in front of the screen like this. We're not meant to do. We're meant to get out and walk around the block every once in a while, you know, go see a friend, have a laugh, you know, like Steve said, like tell a joke, right? I mean, not just to yourself.
Oh God. I don't think I'll ever get that mental image out of my head of just like telling a joke and then just like dead silence on a Zoom call.
Terrible.
Oh God. But I mean, you're absolutely right. I mean, there's human interaction is absolutely necessary. And
Well, look, jokes are dead now anyways, because you can't say anything. You know,
that's true.
you're gonna offend everyone. It doesn't even matter if it's like a knock joke. I think I don't even think those are permitted anymore. I think the comedians they're about ready to go on strike, I think.
Oh God. I feel like half of their jokes are now around it's just a joke. Like I'm telling you a joke. This is what a joke looks like.
Yeah. But that joke is going to get tired. Then what?
Yeah.
You know? So.
Oh gosh.
Actually, adopting a new way of, you know, especially, you know, spreading the fun around the world by posting of memes and some jokes on social media. And that was something I wouldn't do usually on LinkedIn, which is a professional space. But then this is a new norm. Actually, we are seeing more and more people sharing it just because there is no other way to have a little bit of fun and still feel that you're kind of engaging with your professional colleagues and peers. It's a new way of connecting with others, and I'm really excited about it. But at the same time, I'm getting a lot of trolls that is saying like, "Nah, this is professional. Just keep it out of it. Keep it to yourself."
Well, I'll tell you one thing I'm really worried about. You know, when you're isolated at home and you only have digital technology to interact with, you put yourself, if you're not careful, you put yourself in an echo chamber, because the data, Steve, that you focus on is being used to basically understand how we think. And then it forms a reality around us, like an echo chamber.
Yeah.
And we're forced to go to work. We're forced to get in a cab and go to the train, ride on a train together, see people that are different, talk to them, go to work with people that are different, have different points of view. But what's happening is we're literally enclosing ourselves in echo chambers of like-minded people. And that's why I think we're becoming more this polarization, and this is not good for us as people. And that's why I think we got to break out of this a bit, use the tools where they can help, but not become a victim of the tools. And I'm really worried about it, because I see it, I see on social media. Like, what I do is I try to like grab information from multiple places so that I keep getting a balance in my feed of information. Because if I just start like researching on one side of things, all of a sudden the whole thing tilts, just starts feeding me. It's like they figure out you're a diabetic and all you see is like commercials for candy canes. It's like terrible.
Yeah.
It really is.
Yeah.
Yeah, no, totally
It's
agree.
exploiting it. The technology is meant to improve our quality, not life, not exploit us.
It's going to be really interesting when we go back to work, because we haven't had that type of interaction for a really long time. So the reintegration of having these types of conversations where it's not polarized, where someone might have a different view, it's going to be interesting. Absolutely. And so I agree with that. I hadn't actually thought about that as much as one of those kind of challenges of reintegrating into the workforce is absolutely that. Fortunately, I deleted my social media like 3 months ago because I got so sick of it. The majority of it, not LinkedIn, but Steve, I'm with you on the memes. Have always been a fan.
But one thing I will tell you is how I look at Microsoft, the comeback potential it has with LinkedIn. That tool is so powerful.
Yeah.
It has just unlimited potential. And also think about, they've got Teams,
Yeah.
right? And with 365, everybody's going to the cloud. I just think Microsoft is so well positioned in this new digital world. And they're all software and all cloud. I love Apple. I'm using everything here is, iPhone, iPad. But at the end of the day, it's a piece of hardware, and a lot of the software that they have is not as unique as it used to be.
Mhm.
And you kind of look and say, well, all right, well, Apple's trading at 22 times EBITDA, and they got the same market share Samsung has, and they trade at 6 times EBITDA. Square that circle. But right, Microsoft really, I think, just by a little bit by happenstance, and some by just being smart, they're 365 and Teams and LinkedIn. Boy, they have some tremendous assets. I have to tell you.
Yeah.
It's not an investment opportunity for me, it's not, but I just, I like trying to figure this out. I mean, and like you said, I'm not big on the social media, but boy, have I ever amped up my LinkedIn effort. Holy crap.
No, that's
Go ahead, Steve.
no, that's actually something that I noticed around 3 years ago, where when I was on social media and I could see the trend that personal branding is going to be huge. So like kind of pumped up the activities, and I'm super happy that I did what I did 3 years ago, and I'm getting the results right now. It's hugely rewarding when you do accumulate followers that are trusting your voice and they're interacting with your posts, and that's just a phenomenal asset that you can have a part of. Having skills or money, that will make any project more successful. The success rate will go higher when you have these people that are ready to interact or follow your advice.
Well, for people who, one thing I would tell you, this is about when the pandemic hit, I was like bored. I was home and I was bored, and I was like, next thing I know, it's like I discovered this LinkedIn Pulse, which is, you can sort of publish on LinkedIn.
Mhm.
And I started writing articles. I just had some things of interest, and I started cranking these articles out. And lo and behold, it was wonderful. I reconnected with people that I hadn't talked to, people I had mutual interest. It led to some investment opportunities. So that's another thing. I don't, for the audience, I kind of just discovered it, and what a powerful tool.
Yeah.
Uh, if you haven't used it before, go check it out.
Awesome. No, great tip. So we've got a couple minutes left, but we have a question from the audience, which honestly I found super interesting because when it was asked, it started my gears started turning on how we're actually doing this. But so how has deal sourcing and VC changed in the work from home environment? I feel like it's been a lot more. It's been a lot different from a kind of networking, kind of in person perspective because especially at the early stage, you would go grab coffee with another person in venture capital and start talking about it. And like, oh, I'm working on this deal. It's like, oh, let me take a look at it, and kind of start working from there. And everything's kind of was a lot of very referral based.
What I would tell you, which is a shift, is that most deal sourcing prior to COVID for me,
Mm-hmm.
both on the private equity side and on the venture side, came through relationships,
Yeah.
and it would arrive either by a phone call or an email. Since COVID, I would say that has shifted. The top source for flow for me has become LinkedIn. It's like my directory on LinkedIn has become more powerful than my personal directory in my phone and my email. And people are feeling more comfortable about reaching out on LinkedIn. I don't know, and presenting stuff.
Yeah.
So I think I think LinkedIn has turned a corner on being more than just a way to connect to people, but it's a way to get their business plan in front of investors. And so that is something that I've noticed. But I will tell you, there's still, and this is a problem, and maybe Create New is going to crack this enigma, which is there's only so much time to look at so many deals,
Yeah.
and it's like a needle in a haystack, and it's really expensive. The due diligence process. Somebody needs to come out with a way using AI to be able to sift through all of these opportunities and get you down to the red zone rather than starting on from the kickoff.
Yeah.
And that really, I think, is a huge opportunity. And since we're in a digital world, somebody's going to crack that. And so I'm really looking forward to Create New's product, which is geared specifically like that. So an investor like me who's tech all the time, I can put in the sort of profile that I want, and then I can get served up a score, that will tell me like where they rank and whether this is something I should go put my energy in.
Mm-hmm.
That'll free up a lot of my time. And so I'm really interested in seeing how that develops, because that to me is the next frontier. You just don't have, you're trying to find a needle in the haystack, and they all look the same until you spend time and money. And you don't want to spend time and money. You want to be able to find then you need a needle finder, right? And so that's we know some people that are out building that right now.
No, very exciting. Very exciting from that standpoint. And 100% agree with that notion. Steve, any final thoughts?
Yeah, on that note, I would say that I've heard and seen a couple of similar ideas about using AI to kind of, filtering through these ideas and projects happening right now at this point. And there isn't a huge success because it's a lot more complex. Like it's not like credit scoring, which is a little bit more streamlined, and we had enough data to get a pretty good results. It's more complex than that, and still needs refinement. I think that's something that will probably we will see some MVPs coming up in the next year based on my observation, and that's just good enough to filter like 50-60% of these ideas and give open up opportunities to spend more time with projects that have legs. And you would like to be careful about your time investments, because there's so much of time that you have available. And that's a similar thing that everybody is concerned about, especially those that are investing in early stages. um, we have seen a little bit of shift in investment in early stages in Australia. I guess VCs and funds are becoming more conservative during this pandemic. The total investment went up by 40%, but then they were more relying on kind of more successful startups, post revenue kind of scale up projects, versus that you would like to see these venture capitals taking more risks, and that risk needs a lot of help. And hopefully we get to the point that these recommender systems will give you a benchmark for the I guess opportunities for very early stage startups.
Awesome. Well, no, very valid point. And gentlemen, that's just about time. Honestly, thank you so much for a great conversation in challenging times. Really appreciate the laughs, and look forward to chatting again soon. Thanks, guys.
All right, guys. Thank
Thanks,
you.
Lucas, David. Thank you.
Thank you, guys.
Bye.
Bye.